First thing I want to talk about in this session is briefly mentioned it yesterday, but it's the quickly swiping up buyers and sellers. The other thing I want to talk about, and I'll start with this, is the what to expect, what to look for with respect to headlines. And I thought of this because of after 9/11, there were headlines that if they happened now, market wouldn't even react. I mean, Trade the News wouldn't even report them. It's irrelevant. White powder, a package left in a subway. Those were just incredible, worrisome headlines that moved us a lot in the months after 9/11, okay? Because it was front and center. We didn't know what we didn't know. And not to mention some terrorist attacks that would happen. I think March 11th, what year was it? 2002, March 11th, 3/11 in London when they had their terrorist attack. So you got to know that this is a historical event, that the market's going to have some near-term muscle memory. And what are some of those headlines? And if you guys know or think of some headlines, pop them in and I'll share it with the group. But some obvious ones are, the notion that there's a big flare up that is almost like a knee-jerk flare up in some state where there's a huge outbreak and they could report it. Not something that leaks in because the market could kind of price that in, but something that you snap your fingers and it's a headline that worries the market that a state that was doing well all of a sudden isn't. They have a huge jump, something like that. Could happen tomorrow, could happen in a month, could happen in 3 months. But that's kind of obvious if it came out that blatant. A vaccine sooner rather than later. A vaccine next week, next month. Don't allow yourself to be surprised. They get a vaccine before the fall, during the fall. Right now, I think it's priced in before the end of the year. Fauci kind of backed up Trump's claim that they think they could have one before the end of the year with the speed at which that they've pushed it. So vaccine sooner rather than later with expectations to be at year end. That's a headline that would drive us initially. Therapeutic drugs. We had it a couple weeks ago. Gilead with this remdesivir created some upside, and that could be a headline that moves us. I knew, and this might not be something for a couple months or even years, but I don't want you guys to forget. And that is a new outbreak, like SARS to MERS to Ebola. We've just and Dave mentioned it, we're going to have another one. It's just when, because we have had other ones. This is a novel coronavirus, and what makes it worse because nobody is immune to it. But we've had coronaviruses in the past. So we're going to have another one. When we get that other one, the markets initially are going to assume the worst and go down. They're initially going to think that the same thing that happened with this one's going to happen again. So there'll be a knee-jerk reaction lower when the next outbreak comes. And the next outbreak could be a subtle headline, but you got to be on top of it because it will move us if there's a spread of a virus in wherever. It doesn't have to be from China. It could be from anywhere now. All bets are off. Here's another thing you got to remember. This word, rumors. There will be rumors of a spread, and we might react lower. And then the better trade is often unsubstantiated reporting. It's not true. They dispel the rumor, and then they rally. They break on the news. Oh, it wasn't true. That happened a lot after 9/11, where there would be some rumor in the market, and we would be breaking. No, it's not true. Boom, we pop. And there could be some of that stuff. When I tell you guys this, I'm telling you now, don't expect it to happen tomorrow, next week, next month. But when it happens, you'll default back to this session and say, hey, you're prepared or looking out for it. Because if I wait to have this session, there are a few of these headlines could be behind us. And I want you guys to be prepared because this is an historical event like 9/11 was. And having traded through that, having traded through a year and a half, 2 years almost of a financial crisis in 7 and 8, it was at least a year and a half crisis where it was every day in business for business channels. August of 2007, all the way through 2008. It started to wane after '09, but every day it was news to business channels, the financial crisis. So having traded through that historical moment, trading through 9/11, there are subsequent headlines that come out, especially with fear, like 9/11 created with terrorism and white powder and anthrax and the like. Subsequent terrorist attacks, even as we are 10, 15, 20 years removed, their knee-jerk lower reactions to terrorist attacks. The difference is they were more exaggerated and bigger moves when it was closer to when it happened in 9/11, because the knee-jerk thought by the markets are, oh, it's going to be 9/11 all over again. That's what's going to happen with a new virus, because we're going to have another virus, and the knee-jerk reaction is going to be lower. We're going to have rumors of another outbreak for some reason, or somehow, somewhere, at some point, and you'll be prepared for it. You'll remember this session for it. Dorian puts a second wave, and the thing with a second wave is kind of like what I had said at the beginning. A second wave, is that a subtle one comment headline that moves us, or is that leaked out and dribbles out, and we end up staying weak for a couple of days, and then that's they're just pricing it in. There's a little less opportunity. It's important to know the market's trading and it's getting weak and it's staying weak because of the possibility of a second wave. And I think this is a good way, Dorian, to put it. That's the way I think it'll be framed. Second wave. Second wave has to start somehow, though, right? Second wave has to start somehow. And I think that that's important to stay on top of and not overreact, but not let it surprise you. Another one is the adversarial comments and maybe actions between U.S. and China, between the rest of the world and China. Where does it go? Does it get hotter? Does it cool off? We have our election, and so this is even a more historical event, because you have to know whatever your preference is, don't let it interfere with your trading. Trump will create an upside reaction. The markets want Trump because of certainty to win. There's a lot of uncertainty with any new president. So Joe Biden wins or Joe Biden stays in the lead as we get closer to it, whatever. We'll know who and what the markets are pricing in. Right now, too far away. But Biden down, Trump up. And if you remember, the markets got it wrong November of 2016. Clinton was priced in to win. The uncertainty of a Trump victory initially sent us down, limit down. But once they figured out, well, wait a second, it's not the end of the world, they rallied and rallied a lot. I don't know if they rally a lot if Biden were to win, because it's a whole different ideology and just that giant uncertainty. And so you got to watch pivotal comments by key figures, Trump, obviously, and Pompeo and Chinese leaders. What could be those adversarial comments? I don't know. You don't know. But when we hear it, we know. Don't try to predict what could happen. Just put yourself in a position to get yourself in the market. Not meaning opening a position in the market, but mentally you're in the market. You're in lockstep with the charts. You understand what's going on. You know what's moving us fundamentally. Fundamentals will always be more important than technicals, because we're only as good as the fundamentals at some point. So you want to know, a few weeks ago, maybe 2 weeks ago, when Trump started talking about additional tariffs because of this as payback. He didn't use the word payback. He took off the table. It was a rumor that day that they could do a cancellation of debt, but he took that off the table, but then was specific on what he would do. And so, that's not going to go away. They've already introduced, as Tom just mentioned, canceling federal retirement investments into China. That's been out there a couple weeks. Now they hit it again today or overnight, and Bloomberg put out an article with that. So far, it hasn't seemed to move us lower. I mean, we opened up higher after that. Has been in the news as a chance of doing it, and now he's doing it. I think that the early morning sell-off was pricing in a negative Fauci that they didn't get, I think, initially. But that we'll see. We'll see if there's a countermeasure, right? Remember, trade talks last year dominated the late part of 18 and all of 19. Trade talks dominated our markets, right? Every day I remember writing trade as a driver. Trade, 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 trade. Every day of 19. New tariffs up. You get new tariffs that go up, market goes down. Not as bad tariffs, we go up. They're going to get a trade deal, we go up. No trade deal, it's off, we go down. That was all the roller coaster of all of 19. That returns in a way with a different spin on it because the economy isn't nearly as strong. It's been shut down. So now it's fractured. And now you have the problem with this virus as a giant wedge between the two countries. So I'm just trying to get everybody prepared, which means to be able to handle surprises, to be less surprised if you're surprised at all. I think is in part a definition of preparation. It doesn't mean you're never nervous, no butterflies when you're trading, but you're handling it. And I'm reading a book that I get into it after I'm finished that talks about Navy SEALs. And I'm not comparing trading to what those guys do, but a stillness that they have. But they're human and they still have anxious moments and butterflies, but a sense of stillness. Being prepared, and that's what those guys are, probably the most prepared creatures in the world. That's where you got to be. And part of being prepared is knowing what to expect. So when the boogeyman jumps out, you expected him to jump out. Maybe you're in defensive mode, but you're better prepared to react than if you didn't know the boogeyman was there. The boogeyman does exist, by the way. It's in our head. So you got to know, walking down a dark alley, if you know someone could jump out at you, you're probably prepared. If you just go in unaware, oh, wow, that's when you get beat up and robbed. Or you end up in that dark alley in the first place. So dark alleys aside, I want you guys to work hard at what could come out that starts to move the market long term or short term. I know the difference. Very important. Happened and all kinds of opportunity post 9/11 from it because of the worry state that we're in and we will remain. And there will be a time where there's a new outbreak of some virus. You might be in front of your screen. You might be able to sell the SHIT out of it, and you'll think of me. There will be a rumor of some outbreak, some flare-up, and we'll break. And then the rumor will be dispelled, and then we'll rally, and you'll think of me. Here's another great one, and that's why I wanted you guys to give me your input, because I can't think of all of them. Bruce says Pence or Trump getting, or Biden even coming down with if Biden gets it, I don't mean to be funny, but it might go up. No, but Trump or Pence come down with this coronavirus, or the rumor that they have it first, and then they dispel and they're fine. So that's a great one. Trump or Biden or Pence, Trump, Pence being, one, two, the people that the markets do not want to see to get, and then maybe Biden number three. I think even before Biden, you'd have anybody closer to the president, because that's right now the market's on eggshells because Pence assistant got it, a valet driver got it, a bunch of Social Security, Secret Service got it. So they don't want to get any closer. So anybody closer to the president, or worse, the president or the vice president. And that's more, well, that's not even near term. That's not even near term. That's until there's a vaccine. So that's a great one. Trump or Pence get it, or a rumor that they got it. And the rumor that they got it might not be a rumor and it's factual, and we continue to go down. But the rumor is a rumor, and that nope, he doesn't have it, he's fine. Up we go. So, real good one. The next thing I want to talk about today, and then we will wrap it up, is hold on a second. Um, I'm a metaphor guy, as you guys know. And so I use this metaphor trading. I've said this saying, trading is like shooting fish in a barrel, and sometimes you're the fish. Might have been the first thing I ever said 20 years ago. It was early in my career. It was in one of our meetings, and the owner of the prop firm started using it. He liked it so much. And he had traded for 15 or 20 years before that. Trading is like shooting fish in a barrel, and sometimes you're the fish. So you want to be able to be on both sides and know when you're on both sides. But I want to take that metaphor onto using the fish. I touched on this briefly yesterday in the trading room. Do you ever see when a seller comes in and boom, they pick them up right away? They pick them off right away. Not just you're selling, but a big order comes in, 100 lot seller, and they buy it. 100 lot seller comes in and they buy it. So there's an appetite for buying, right? Well, here's the best metaphor to understand it. If you're fishing, all right, let's say that's you sitting on a stoop, because most of you guys are older, so you have to sit down when you fish these days. And you probably got an ugly hat on. And maybe you're smoking a cigar. And you're fishing, all right? If you're fishing, the bait, now stay with me on this. The bait is the sell order. You'll never forget this if you listen to this metaphor. The bait is the sell order, all right? The fish, are the buyers. Right? So once you throw your fishing pole, once you cast and and boom, you get hit right away. Reel it in, cast again, boom, you're hit. Reel it in. You know you got a lot of fish. You know you're over a good fishing hole, right? Well, if the fish equal the buyers in this story, and the bait equals the what? The order, the sell order. If you know there's a lot of buyers, you could start to build a case that the upside might be the right side. So if you read order flow and you see selling get eaten up right away, it's like the opposite of conventional wisdom. The retail guy will say, "Oh, big seller. Yeah, let's go." No, he's getting eaten up right away. Someone's absorbing that guy quickly. He comes in passively, they reach and they grab him. He comes in as an iceberg, they reach and they grab him. You know you're sitting over a bunch of fish if you keep getting hit every time you cast. Your bait's good or you're sitting over a lot of fish. Chances are you're sitting over a lot of fish. And you want to be able to put yourself in a position to answer that question with the answer, there's a lot of buyers. Why? Because I read order flow when selling comes in, it quickly gets eaten up. Does that make sense? So I want you to start to reading that when we look at Dave's screen share or your Dome or any tool you're using to find and read when selling comes in, whether it's a particular order or with particular size. Now, I mentioned this, I think, today, and it's worth re-mentioning for some that didn't hear it. And again, for those that did, in the pit, when everything was in a trading on a trading floor in a pit before computerized trading, you had, let's call this the pit. Oh, it's an ugly pit. Some of them were octagons. I don't want to erase this because this is a really cool picture of what you guys would look like fishing. Um, so a pit would have a lot of brokers and a lot of traders in the well of the pit, and then on the perimeter would be brokers or order fillers where orders outside the floor would come in. Point is if all the locals in there were all bidding 3 bid for whatever, there's just 3 bid, there's a lot of people bidding. So 3 bid for size. The 4 offer, small. Barely 4 offer. Barely 4 offer. 3 bid a lot, 4 offer small. And a broker comes in, and I said this in the room, they weren't supposed to do it this way. You shouldn't offer into a bid. If you have to sell 20 and it's 3 bid, you don't say 20 at 3. You just go to a guy who's bidding 3s and say, I'll sell you 10 or I'll sell you 20, right? That's how they did it. But if you did make the mistake, and brokers did it all the time, and said 20 at 3 and it's 3 bid for a lot, the roar would just uptick. There'd be just a ton of yelling. Sold. And the word sold was used whether guys wanted to sell it or buy it. At the CME, if someone said 20, I'll sell 20 at 3, and you wanted to buy it, you still said sold. If someone said 3 bid on 20 and you wanted to sell it, you'd say sold. If someone said 20 at 4 and you wanted to buy it, you'd say sold. But my point is that the noise level would go up if it was 3 bid for size and some guy tried to sell 20 at 3 or did sell 20 at 3, or someone in the corner of the pit was selling, and all these guys are diving on the 3s, right? That's the fish. The 3 bid for size are the fish. And the bait is that sell order into the bid. You want to buy 3s because you pretty much could probably sell 4s right away. It's like an automatic one-tick winner. So that's something we don't have the audio necessarily of sounds to be able to identify real buyers versus real sellers. But just focus on how quickly they could pick up buying and selling that comes in, how easy it is to push it around. Now let's go to Dave's screen share and talk about what this looks like. You'll hear me talk about it because the visual has been made much better with this tool. And again, if you want to see it all day, you have to be a room member, but you'll see the enter button or a subscribe button to have this where you could display it anywhere on your workstation and have it through the close rest of the session. So if you trade all day and you like it, you obviously got to do it. But look at all this selling that came in. All right. As soon as they're done, we're able to pop. As soon as their appetite, there was no appetite for selling ones down. As soon as they were done and there was appetite to just buy the rest of them, you're able to go up. Here's an example of the other side of the metaphor. The other side of the metaphor is a sell order comes in. You pop your bait. There's a hook, and you pop your bait in the. Let me draw a picture of what you guys would normally look like. You got to sit down because you're older. You got a little ugly hat on. I like cigars, so we're smoking cigars. All right, and so you're fishing, and you don't catch anything. There's one fish way over here, and he's smiling at you. You're sitting out there fishing. Your cigar is almost finished. You haven't caught a damn thing. So you move, and you drive the boat to another spot, and you throw in the bait till you catch something, until you find where the fish are. So that's the seller can't find any fish, can't find any fish, can't find any fish, can't find any fish, found some fish. And then wham. So that's important when sellers come down. It's a really good story to help people understand. You drive around the boat till you found the fish. Sellers have to find the buyers. They chase it down until they found enough people willing to say, "Sure, I'll buy it." Now, when you see a iceberg order come in or a big order come in these grays that Dave has, or if it's red, it's a sell iceberg, and it gets gobbled up right away. Generally, there could be upside because the sellers are getting satisfied. There's a lot of fish. There's a lot of buyers. When this gray comes in right away and gets eaten instead of having to chase it down, generally there's an appetite to buy it. And generally that means upside's the right side. And I don't want to go and explain it any deeper than that. Just keep it simple. Just think of yourself fishing. Are you catching fish? Are the sellers catching fish or not? And let's go to some questions. I think I answered that question, Michael, with what I just went over. If you're not catching any fish, you either have to set your bait deep, set your bait and your weights, adjust them so you're fishing a little deeper, or go to the other side of the lake. And that's the sell order when it's coming in, going to the other side of the lake. Another question. If you're selling, you want to see a lot of buyers. Or if you're buying, you want to see a lot of sellers. No. This is to create an opinion, not what you're doing. Forget about what you want to do. So when you ask the question, if you're buying, if you're selling, forget about that. The market. Help create a predictive skill. If the market is selling and is getting filled right away, it's bullish. The market is buying and getting filled right away, it's probably bearish. That's it. Don't try to go any further than that. You have to get good at what tools you're using to identify buying and selling. The footprint is showing aggressive buying and selling. And the dome could be showing passive buying and selling. But that's a whole nother session, and I've done it multiple times of identifying how to use different tools, different ways to identify and where you strip out orders. But with this one, I think this makes it simplistic because these are actual orders and intent. There were a couple moments that got me bearish and short this morning of that, where the buyers were just, here you go. Someone would come up. Oh, you want to buy it? Yeah, I'll sell it to you. Couple moments of those, but the real kicker for me was that chart pattern I did the highlight video where you had two swing lows and the third one had a couple chops. But the overall move, I felt there was more in it on this pattern, and there were a couple moments of it was easy for buy orders to get filled. Easier for buy orders to get filled. So first you have to identify how you identify buying and selling. And I don't want to make this webinar about that, but there's aggressive buying and there's passive buying and there's aggressive selling and there's passive selling and there's limit orders, market orders, these red boxes, green boxes and icebergs and limit, sell orders that are big enough The footprint, remember, are orders that trade aggressively on the bid and offer. The footprint. The green boxes are someone that jumps up for 100 or more and buys it. These gray areas above the market, they'll have a minus sign. It shows a resting offer of 100 or more. Gray below, it shows a resting bid, 100 or more. So keep it simple, keep it short, and just try to apply when you see selling that quickly gets eaten up. What does that tell you? And always think of how your edge is going to be opposite. Always think that opposite of conventional wisdom is what I'm trying to explain to people and have been for years now. Find conventional wisdom in trading and then think opposite. You can get run over though, so you can't just do it all the time, but you could pick your spots. If it's obvious to everybody else, then they're all going to do it. And when it doesn't work, when they all do it, is the edge that you're always looking for and getting better and better at using better tools to find it. That's what this MBO stuff is on Dave's screen share. And I'm glad other software programs are making this the buzz phrase of the industry, because they won't know how to use it, but they'll be trying to. Plus, they don't have the puke tool. They'll see selling and want to sell it. They'll see buyers and want to buy it. The question is, how easy is it to get filled? And remember the noise. Remember the roar. It used to be a saying when the Blackhawks left the Chicago Stadium, just a smaller stadium. They moved across the street, and it was real loud in this old stadium. And remember the roar was the slogan as they had their last year in that stadium. And I want you guys to remember, you don't know the roar, but remember the story of the roar of when someone goes in there to sell it and everyone yells to buy it. There's an appetite for buying, right? But I'll repeat, someone asked me to repeat the comment on the market. Don't worry about what you're looking to do. This is about creating an opinion, a bias, some predictive skills. What is the market doing? The market, there's a buy order and it quickly gets hit. The market has an appetite to want to sell it. So when there's a big buyer and he gets hit right away, comes in and gets hit, there's an appetite to sell it. There's a lot of fish. What's the market doing? Market seems to have a big buy order come in, they crack them right away. That's bearish. If the market has appetite to sell it and it gets absorbed right away, that's bullish. But you have to make sure you understand it, not by the way I'm explaining it, just the whole fundamentals of it. Just you got to create a real life situation. In order to understand it, you got to create a real life situation for yourself and explain it back to yourself. If there's a long line, someone that's selling something, it's easy to determine there's a lot of buyers, right? You see them. They're in line. Every other tent's got 2 people in front of it. You think of a summer festival. All of a sudden, this got a long line. Well, he's selling ice cream. He's the only tent allowed to sell ice cream. That's what happened in the neighborhood I grew up in. They had their summer festival. The guy who had the most pull got the only ice cream permit in the festival. And there was a line around everywhere. Not only was he selling ice cream, but he had the best location, and he was the only guy allowed to sell ice cream. Anyway, how do you identify if there's a lot of buyers? Long line. How do you identify if there could be a lot of buyers? Well, because when I see a seller, boom, it gets eaten up. As soon as I throw my pole in, fish hits. A lot of fish. Well, maybe you got good bait. Come on. Maybe there's just a lot of fish in there. I got good bait. All right, guys. We'll see you in the trading room tomorrow. Be safe. Later today, we'll upload this. Create, and this goes for anything, though. This is where I'll leave you. Create a real life metaphor for yourself, and it'll help you understand it. So here, maybe this is happening, and I wasn't watching it in real time. When these came in, these icebergs, they cracked them right away. Boom, they cracked them right away. So there's probably maybe some downside potential. Putting yourself in a probability zone. We'll see you guys tomorrow.